Hi, today in discussing one of the reasons traders lose money. Now, before I start or get into it full gear, I want you to like, subscribe, and follow me if you've not done that. Okay? However, if you've done that, then let's continue. Okay. One reason I want to mention today, in addition to all the other reasons I've been mentioning on this series of the traits of a losing trader, and these things are avoidable, or you can improve on it just like I did. And every trader improves one way or another. There is no stop on the improvement process. Even the best, like you consider, still notice one or two things that make them realize that, oh, something is wrong with the way I traded this setup. I could do better. Okay, so without much ado, let's look at this strictly. Now, in discussing one of the reasons why traders lose money, I've discovered something. And this is one thing that I already fell short of it when I was in the beginning stages of my trading career. I realized something. In trading, there are two main parts. No matter the trade strategy you're using, there are two main parts. Okay? Two. Your entry and your exit. That's all. That is the alpha and omega of trading. Your entry and your exit. Now, I have noticed that most traders are obsessed with their entries but don't have any exit plan. And this is a major problem no matter how good your strategy is. If you don't have a good exit plan, you would hold drawdown from negative 20 pips to negative 200 pips. That is the major problem. And drawdown is just a technical term of saying holding a floating loss that is not yet closed, because so far as the position is open, it's still floating. Once you close it, the drawdown becomes confirmed, which is your loss or my loss becomes confirmed. Now, you and I don't have that deep pocket like the institutions and hedge funds and whatever. See, central banks, and you mentioned it. They have deep banks that can hold losses for 1 year, maybe 18 months, but no one is expected to hold loss for that long amount of time. For instance, I remember one time on Bitcoin, there was this particular lady who was managing a particular hedge fund. She bought Bitcoin right at the point Bitcoin hit $60,000. Right at the point Bitcoin made all-time high of $60,000, she bought. I believe she bought over 1 million Bitcoins. Yes, over 1 million. And it hit $60,000. Yeah, the total amount she spent should be nothing less than $1 billion. I could be wrong. I stand corrected, okay? Now, Bitcoin dropped from that all-time high to $40,000. If we remember back then, I think that was 2023, 2022, thereabout. Bitcoin dropped, 2022, 2021, yeah, Bitcoin dropped to a very low value of $40,000, the range of $40,000. But I'm sure this lady and her group didn't just close and say, no, let's take losses. Now, Bitcoin has gone even above 60,000 to the range of 100,000 and plus, more than that. Now, you see how long it took from when it dropped to coming back above $60,000. Now, she has a choice of closing or taking out some profit to diversify her portfolio, or leave it to keep appreciating because it's considered that cryptocurrency has come. Now, the point I'm trying to make is this. She was willing to be in that drawdown for no matter how long it will be. She was willing to accommodate that drawdown. But you and I don't have that kind of deep pocket or patience to hold a position to be in losses for a long time. So what do we do instead? Very simple. Have an entry plan and an exit plan. Now, this is something I've also noticed. Your entry defines your comfort. Your exit defines your profit or loss. If I enter a position, I'm entering a position because I'm comfortable with how the setup is. But my exit will not be based on I'm comfortable now. It will be based on the plan I have instituted for myself. Okay? Oh, I want to live at this resistance level if I'm taking a buy, or this support level if I'm taking a sell and price is coming down. That is the plan, and it's based on profit or loss. Loss in the side that if price goes against me, this is where I want to exit this particular setup. If price is in my favor, this is where I want to take out my money and call it a day, or that particular setup is done for me. But not when price is reaching my TP and has crossed my TP and I'm like, this looks very good. And I leave my 100% exposure in the market. Now, what most traders do is they don't even close their position from stop loss. Let's say this is their entry, this is their stop loss. They don't make it break even, which is the same level, but break even to me is not on the same level. It's some pips above your entry, which is here. So that if price comes against you, some pips above, this small difference between where you entered and where your stop loss is now on a buy position will serve as a cushion to cover your spread, to cover your commission, whatever you have to pay. This particular distance will cover that. Okay? But if it's here and price comes against you and comes to your entry, you will lose based on commission. And your commission could be a function of so many your brokers business plan or how they decide to run their particular firm. But that is, by the way, we are traders. We don't own brokerage firms. But if we have to do, that one is a different discussion. What I'm discussing or what I'm proposing to you right now is that traders lose money because they have a perfect entry plan, entry system, entry structure, but weak exit plan. So if you know, like I said, the alpha and omega of trading is entry and exit. If you can become strong in having an entry plan based on how comfortable it is, and when I mean comfort, mechanical comfort, not emotional comfort, mechanical comfort. Has it met the criteria you've set for yourself? Whatever thing, what trend are we first? Is there any fundamental news that would impact this particular trend in the nearest minutes or seconds? Okay, what technical bias are we looking at? Okay, I know we're in a buy trend, bullish trend. What other thing am I going to look out for? Are we close to resistance level or supply level? If I want to take a buy, that means I need price to either break above or give me a fair value price, retrace a little bit so I can join it to make a new double top, like it's called by the current strategy, double top. We just call it resistance level. Okay, now that resistance level might not be as strong as a supply level because of where price is reflecting based on history. That is a long thing. I don't want to digress from the point of this particular series, what I'm discussing today. So the point today is people lose money, traders lose money because their exit plan is weak. And you can only become better when you know what your weakness is and improve on it. Okay? So if you've watched to this very point, don't forget to like, don't forget to subscribe or follow me, and tell me what you think are other reasons traders lose money. Okay? Have a lovely weekend. Peace.